This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks and US futures under pressure after President Trump threatens a 30% tariff rate for the European Union and Mexico. Bond traders casting doubt on a September Fed cut ahead of key US CPI numbers. The EU preparing to increase engagement with other Trump tariff targets, including Japan and Canada, while extending talks and avoiding the higher US levy. And Secretary of State Marco Rubio says a C-Trump summit is now likely after meeting with China's Wang in Malaysia.
And take a look at how we're setting up for the Asian market opens. Of course, we continue to see some caution given President Trump's new tariff talks. But take a look at Nikkei futures now downside of 0.5%. We already had 2 sessions of losses for the Nikkei. And the topics, the Japanese yen weakening, of course, President Trump wrapping up that rhetoric. We do have Secretary Scott Bessent going to the Osaka World Expo later this week, so we'll be watching out for that if we get any sort of trade negotiations. Korean stocks and the Korean won have been down as well, all under pressure. Asian currencies and stocks really feeling that caution coming from, of course, the trade negotiations and the new tariffs. Take a look at how U.S. futures are also setting up because we had seen U.S. stocks falling from that record high. We continue to watch the Treasury space as well. 2 weeks of losses there, given, of course, fiscal concerns also continue to rise. We do have, of course, inflation concerns with the new tariffs as well. We are going to start seeing more earnings roll in, including from the 6 biggest banks in the U.S. this week. We'll be watching for CPI numbers as well, Haidi.
Shery, it is still front and centre when it comes to trade, RAD being the key focus. Bloomberg has learned that the European Union is preparing to step up its engagement with other countries hit by the Trump tariffs. The president is threatening a 30% rate for the bloc and Mexico if they can't strike deals by the end of next month. Our senior editor, Wendy Benjaminson, joins us now from Washington. So we're hearing there's sort of a little bit of room for talks, I guess, but in the meantime, this sort of approach to try and diversify with alternate markets continues.
Yes, that's right. Trump has been sending out letters all week, especially those Saturday to the EU and Mexico, saying that he was setting unilateral rates, which took a lot of negotiators aback because they were in the middle of negotiations when all of a sudden they get these letters setting these rates. So those talks will continue. No one, I think very few people, including the markets, believe that this is how it will end up. The trouble is that Trump has set conditions for the tariffs that have nothing to do with trade deficits. For example, he complains about Mexico cartels, drug cartels, sending fentanyl into the United States, or he complains that Bolsonaro is seeking judicial case against the previous president of Brazil, Lula. So it's hard to tell just what will set him off. And meanwhile, as you correctly point out, other countries are now looking elsewhere to trade, in particular, which will be bad for the United States, to China.
Yeah, especially if you have more intra-region, not to mention just leaning towards Beijing, as you mentioned, right? And we were expecting that trade deal with India as well. Any indication of where that's headed?
We're not really sure where that's headed. India seems to think they will settle on a less than 20% rate, but who knows what will happen if there is, for example, Trump has been worried about India buying gas from Russia, buying oil from Russia, as they are. The Senate this week is going to consider a new sanctions bill against Russia that will put a 500% tariff on any nation that helps Russia. So if that passes, India's 20% rate, may become a problem. So there's a lot of maneuvering on a global chessboard here as they try to figure out what the president wants and where he will finally settle down, if he settles down at all on this.
Wendy, what else are we looking ahead to? Because obviously Mexico remains a target. We're potentially going to see sort of more talks between China and the US as well. But I guess what's the willingness within the White House in terms of working out a deal, namely with the EU, but also with some of these other parties, as these deadlines still seem sort of pretty flexible?
Exactly. I think a lot of it actually depends on the influence of Treasury Secretary Scott Bessent. We had reported earlier this week that he is the one who is preaching to the president that he remain patient, that he let the negotiations, carry on and see where they get in true negotiations. And whenever Trump speaks in public about the tariffs, he always says, I just want to send them a letter setting a unilateral rate, which is what he has been doing. And I think right now the White House is sort of doing both things. They're in negotiations while Trump is threatening these tariffs. So there's a lot of uncertainty about. I think this week we are going to see that Russia sanctions bill move forward in the Senate. It is one of the rare these days bipartisan pieces of legislation. And we are going to see either the results of these trade talks or more letters from the president, trying to set unilateral rates. So it's going to be a very, very busy week.
Yeah, especially for officials at the White House as well. We heard from Secretary Scott Bessent is coming to the World Expo in Osaka. Any indications of where these trade negotiations are going with not only Japan, but also perhaps South Korea, which of course is a big trading partner as well?
It's all in Bessent's hands now. I think, the trouble is that the other negotiators, the South Koreans, the Japanese, Indians, others, are all trying to work it out the way trade negotiations always have, which is painstaking and slow. The USMCA agreement took years. The NAFTA agreement took years to work out. And Trump wants these done, as you said, 90 deals in 90 days. And so far we have 3 deals, and not even those are signed and sealed yet. So I think that the Japanese negotiators are beginning to lose some patience. I think the South Korean negotiators seem to be, nervous about what he's going to do next. And they, as I was starting to say, the question is whether they should be listening to the negotiator sitting across the table from them or to Donald Trump. And the answer that we've learned here in the States is it's probably Donald Trump.
Bloomberg senior editor Wendy Benjaminson there with a really state of flux when it comes to trade issues, and the European Commission's competition and sustainability chief Teresa Ribera joins us later on the program with her insights on ongoing trade tensions with the US and energy transition efforts with China. Let's take a look at markets and traders are weighing up these latest developments. We're joined by Garfield Reynolds, who leads our markets coverage here in Asia. So, Garf, it's obviously it's trade. Obviously, it's also big tranches of China data to show how the Chinese economy is sort of weathering all of the uncertainty.
Yeah, the China data will, especially for Asian traders, be hugely important. One of the things that has helped markets both in Asia and elsewhere to some extent ride out the latest set of tariff threats is that the two largest economies in the world, US and China, even while the trade tensions have been going on, they've been imposing tariffs on each other, those economies have been holding up okay. So if China's economy shows that it's resilient in the face of what has been imposed on it by the US, that's a big feather in the cap for those who are willing to look through the potential pain of tariffs to the current reality on the ground that economic activity is going well, earnings are going to climb, and that Beijing is on its way to engineering a reasonable turnaround in an economy that, only sort of 6 months ago or so, or a year ago or so, certainly was seen as in deep trouble, and in particular, the authorities were seen as being somewhat clueless as to how to turn it around. That situation changed in September, to some extent, with the big hopes that were created by the so-called reform bazooka, and steadily the Chinese have been creating a narrative that the economy there is turning around and is going to and would be going even better than it already is if it were not for the trade concerns, but that even with the trade situation, the trade war with the US, that economy is still in good shape.
Garfield, of course, given the new tariffs, we are also watching inflation concerns. Treasuries have lost ground for the last 2 weeks. We do get CPI numbers out of the U.S. How important will these be?
Well, those are pretty key, especially for the Treasuries market. You know, we've got the situation where Treasuries had been doing quite well until fairly recently. Now there's more nerves again about will the Fed actually be able to cut, or willing to cut rates in September, and that CPI data is going to be very important. You know, everybody's still waiting to see actual impact from the tariffs, and perhaps there's a level of impatience there, considering that, you know, it was always going to take some time for tariff impacts to show up, and it was always very uncertain as to, you know, when they would show up and what would the impact be, short term or longer term. That second question is very much still up in the air because we've had so much uncertainty, so much flip-flopping when it comes to what threatened, what's imposed. You would think you would start to get some impact when you look at what's gone on with US revenue from tariffs. Trump himself was tweeting over the weekend about how there was another surge in tariff revenue for June. So that revenue has to be coming from somewhere, and that somewhere is going to show up sooner or later, either in company profits or in CPI or in both. So this week's CPI data could offer some answers on that front, one way or the other. If the answer is that it's showing up in the CPI, then that's going to be very tough for Treasuries because it's going to take those rate cuts right off the table, and is also going to revive the concerns that were around earlier that tariffs will re-accelerate inflation.
Bloomberg's Garfield Reynolds there. Coming up next on the Asia Trade, Moody's Analytics and OCBC weighing in on how these global tariffs are shaking up markets. Plus, we continue the conversation on trade policy with Japan Foresight. Much more ahead. This is Bloomberg. Let's take a quick look at the week ahead. Fresh inflation numbers out of the US will headline this week's data releases. Economists surveyed by Bloomberg say US consumers probably experienced slightly faster price growth in June, companies passing along higher costs associated with tariffs. Here in Asia, China's economy will be the focus. June trade data due out later on Monday, GDP and activity numbers on Tuesday. Bloomberg Economics says the trade truce in the US probably helped exports, driving growth in the second quarter. Other data to note include jobs numbers out of South Korea, and here in Australia, we also have a rate decision on the cards from Indonesia as well. Well, amidst all of this trade uncertainty, let's get some more when it comes to following President Trump's series of threats about higher levies from next month and the impact across Asia. Joining us now is Katrina, who's the Director of Economic Research at Moody's Analytics. Katrina, great to have you with us. And, you know, at the risk of sounding like a broken record every time we speak, it is still about trade. And if anything, sort of the outlook has gotten more uncertain. What's the sort of view from Asia at the moment? Because there is also this concern that, well, with all of the uncertainty, is it even possible to negotiate and expect that any kind of agreement would endure?
I think you're exactly right. The concern from Asia is palpable at the moment, and we do seem to go in waves. And unfortunately, at the moment, we are in this heightened wave of uncertainty as countries are hurrying to negotiate with the US to try and get more favourable tariff rates than what's currently been announced by that 1st of August deadline. And I think what's critical is just remembering that for many economies in Asia, the US is the largest consumer market, and the market can't be completely replaced by another economy, right? And so they are really prioritizing trying to get more favorable tariff rates, because at the end of the day, exports are the backbone of Asia's economy, and without that strong export landscape, these economies are really going to struggle.
To that point, what are you expecting from the Chinese data?
I mean, China is really struggling and limping through this whole, heightened US protectionism stance at the the moment. We are expecting a weak GDP figure. The Q2 number we are looking like, our tracking estimate is showing that it will show a number less than 5%, which will be incredibly weak and a big downside surprise. But at the end of the day, there's not a whole lot going right for China's economy. Exports will be a bright spot, but that's only on the back of front loading. At the end of the day, the underlying global demand picture is weak, and domestic demand, particularly from the consumer, is struggling as well. Retail trade might be more positive, but that's only on the back of subsidies. If you strip out those subsidies, still consumers are incredibly cautious and not wanting to spend.
How much will China's downside hurt other Asian economies that depend on trade and depend on that demand coming from Beijing?
Yeah, that's a great question. At the end of the day, you know, the world's largest recipients of goods, you've got the US and you've got China on the one hand. So you've got the US not wanting to receive as many goods from overseas, and then you've got China where its domestic demand is continuing to struggle, and you've got supply chains continuing to be strained. So I think, you know, when you're an economy in Asia like that is incredibly reliant on external demand, if you've got the two world's largest economies struggling, then it does, you know, have negative spillovers. And when we're looking at our forecast for this year and next year for economies across Asia, it's just continuing downward revisions, unfortunately. There's no upside surprise in this trade tussle and this weak Chinese growth picture, unfortunately.
Japan has been pretty resilient so far, given its large domestic base, but also just because of that virtuous cycle that we've started to see with wage growth, with inflation now setting in. We do get those CPI numbers later in the week. Are you expecting any change? And will this propel the Bank of Japan to continue normalizing policy, because they've sort of stepped back in the last few months?
Yeah, so we do have a bit more of a pessimistic picture on Japan's economy, unfortunately. So if we look at the domestic side of things, it's not going too well because inflation has been, you know, a little bit higher than expected on the back of policy maneuvers. That real wage growth is struggling to see a sustained return, unfortunately. And so as a result of that, household consumption just hasn't roared back as much as we would have liked to have seen. And sure, the wage negotiations from the spring season were positive. We just haven't seen that more broadening wage gains come on, and so that's also been a handicap on the consumer. And on the export side of things, not much has been going right there, unfortunately, either. You've got that weak global demand picture at the same time as you've had Japan be hit particularly hard by those US sectorial tariffs like steel and aluminium and also autos. So not a whole lot going right. And so what that means for the Bank of Japan is we're probably not going to see much of a policy maneuvers in terms of continuing to withdraw that stimulus, probably until late this year or early next year.
Katrina, in terms of things not going right and the broad uncertain picture, you can sort of understand why the RBA decided to wait a little bit longer. Were you worried about the communications aspect, though?
I mean, I think it's really difficult being a central bank at any time, but particularly difficult in this kind of environment. And so I think it made a lot of sense for the RBA to hold steady, just given the fact that the inflation data isn't coming in as nicely as they would like it to. It is tracking a little bit hotter. And at the same time, what's a real positive for the Australian economy is the fact that the labour market is still holding incredibly resilient. And because of that, that's an important backstop on household consumption. And so that means that the RBA doesn't need to hurry to withdraw that restrictive policy stance as much as they would like. And let's also remember as well that there is a relatively short lag time to the RBA delivering a rate cut and then that actually influencing consumer behaviour. And so because of that, they do have that added flexibility working in their favour.
Katrina, really great to have you with us as always as we continue to contend with, of course, a great deal of uncertainty when it comes to the White House policy regarding trade. We're seeing President Trump now just having deplaned and arrived at Joint Base Andrews in Maryland and speaking to the media at the moment. Take a listen.
Aluminum and steel, a little bit of lumber, but they'll really start in about another week. And then in about a month, they'll come in at levels that are extremely strong. And our country's making a lot of money. We're dealing with other countries and certain countries that would rather have a deal than a regular tariff. And we're willing, if they're willing to open up. These are countries that have been shut to us, but we've been open to them. In other words, they wouldn't let us do business there, but they would do business in our country. Not a fair deal. So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. Japan, as you know, and we're very close to Japan, but they sell us millions and millions of cars a year. We sell them no cars because they won't accept our cars. And they won't accept much of our agriculture either. So, but they're all changing their ways very, very rapidly. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't. But our country is making a lot of money for the first time in a long time, in decades. And that's the way it should be. We have a country that's, and I said it the other day to you people, we have a country that was dead. It was dead. It was a goner 1 year ago, and now we have the hottest country in the world. Okay, questions?
President, it seems like we're taking off about $40 billion that would go to illegal benefits. What does that mean to the bottom line, that we're taking away a lot of the fraud and abuse to illegal?
Getting rid of a lot of waste, fraud, and abuse. One of the reasons I think that you'll see the numbers start to be very good for the country, but I think more than anything else, we have tariffs coming in the will be hundreds of billions of dollars. Gaza, we are talking, and hopefully we're going to get that straightened out over the next week. Let's see what happens.
So Gavin Newsom is fighting. Gavin Newsom's fighting to keep men and women's sports. He's fighting with Bondy, McMahon. As a father, as a husband, does he hate women? Why does he want men and women's sports so badly?
No, I don't know if he hates women, but look, he thinks it's good politically, I guess. He's just saying Gavin Newsom wants to keep men and women's sports. Nobody understands it. Very few. I say it's a 3% issue. You know, they say it's 80-20. It's not 80-20. I think it's 97-3.
So Rosie O'Donnell, she went on Chris Cuomo so recently. She blames you for the fact that she's overweight, depressed, and drunk. What do you say to that? Do you think PDS is going to ever be a DSM-5 diagnosis?
I don't know about Rosie. I watch Rosie. Rosie's a mess. She's a mess. But she left our country, which is a good thing, not a bad thing. Yeah. Well, I'm going to have a meeting with the Secretary General who's coming in tomorrow. But we basically are going to send them various pieces of very sophisticated military, and they're going to pay us 100% for them. And that's the way we want it. And we've been trying to get that again. I don't think Biden ever asked for it. We're in for about $350 billion. Europe is in for $100 billion. That's a lot of money, 100, but they should be in actually for more than us. So as we send equipment, they're going to reimburse us for that equipment. Doesn't that sound good? That's the way it should have been a long time ago. I haven't agreed on the number yet, but they're going to have some because they do need protection. But the European Union is paying for it. We're not paying anything for it, but we will send it. It'll be business for us, and we will send them Patriots, which they desperately need, because Putin really surprised a lot of people. He talks nice, and then he bombs everybody in the evening. So there's a little bit of a problem there, and I don't like it. Oh, I think so. I did. I spoke to him today. Dan Bongino, very good guy. I've known him a long time. I've done his show many, many times. And he sounded terrific, actually. No, I think he's in good shape.
I was going to ask you, on this one-year anniversary of Butler, what was going through your mind this morning, Mr. President, as you woke up to start this new day?
Will you repeat that question?
On this one-year anniversary of Butler, what was going through your mind this morning when you woke up? I know that you're praising God you're alive, but a lot of people want to know how you're taking this day on this one-year anniversary.
God was protecting me. Maybe because God wanted to see our country do better. or do really well, make America great again. But God was protecting me, Brian. I'll tell you, it's the more you think about it, the more you see it. But no, I don't like to think about it much. You know, I have a job to do, so I don't like to think about it much. It's a little bit of a dangerous profession being president, but I really don't like to think about it too much.
You were able to
I think you're better off not thinking about it.
And you were able to accomplish 20 promises so far.
Yeah, and I think we've more than delivered. Thank you for saying that. But, you know, we made a lot of promises, and we've actually given a lot more promises than we even made. Yeah. And you add on that a tremendous success with the strike that we had, getting rid of nuclear weapons in Iran. That was a big, big strike. And, you know, when the pilots came to my office, they were there, as you know, with some of the other people having to do with that strike. And they said something very interesting. They said, you know, we've been practicing this for 22 years, but no president had the guts to tell us to do it. But this has been on our minds for many, many years, and we did it. And I would say from 0 to 10, with 10 being the best, that attack was a 15.
What do you think about this new bill that's going to basically eliminate no capital gains tax on home sales to be able to free up the money? People who've owned a house for a long time can't afford to pay the capital gains.
Yeah, well, we're looking at that, and it could be a very big positive. I don't think for you, because you make so much money, it doesn't matter. But I think it's going to be a great incentive for a lot of people that really need money.
So between that and Jerome Powell stepping down, that could really boost home sales.
Well, I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed, the Federal Reserve building. And I don't know what he knows about building, but you talk about cost overrun. So he got this approved, and he started the work during the Biden administration. And he doesn't look like the kind of a guy, frankly, that wants to spend $2.5 billion. And it's very interesting because out of 71 economists, one person, me, and then one other person, I think from Wharton, got it right, and the others were all wrong in terms of the success of our country this quickly. We have no inflation. We have cash pouring in. It was me and somebody else. And I can tell you, I don't need 5,000 people working for me behind the scenes like Jerome Powell to tell him what he should say once a month, because they got it wrong. The Fed got it wrong. I call him too late. He's always too late. Every point cost us $360 billion. Think of that. And we should be 3 points. That's almost $1 trillion. Approximately $1 trillion less we should be just with the signing of a piece of paper. So we'll see what happens. I mean, you're telling me he's going to quit. I hope he quits. I don't know that he's going to quit, but he should quit because he's been very bad for the country.
On Russia, are you going to be announcing sanctions on Russia tomorrow?
We're going to see what we will see tomorrow, okay? We have the Secretary General. As you know, Europe has announced sanctions. But I am very disappointed with President Putin. You know, I thought he was somebody that meant what he said, and he'll talk so beautifully, and then he'll bomb people at night. We don't like that. Thank you, everybody. Thank you.
We are just hearing now from President Trump stopping to speak with media as he lands at Joint Base Andrews in Maryland there, really responding to some of the questions about trade as we continue to see the uncertainty play out. President Trump talking about potentially a deal with South Korea, saying that South Korea really wants to make a deal, that the European Union is talking to the US on trade as well. This, of course, coming as we hear about this imposition, not just on the EU, but also Mexico as well when it comes to these tariffs that have just been imposed. We're seeing markets sort of reacting to that. But the EU on its side has said that it's planning to step up its engagement with other countries as it continues to potentially talk to the US as well on these the 30% levies that have been suggested at the moment. He's also, Shery, commented on some of the other really myriad geopolitical issues. He's very disappointed in Putin, that they're also talking to Gaza as well, hoping to get that ceasefire deal sorted in the next week, he says.
And it really didn't lose that opportunity to again hit the Federal Reserve, right? Saying that Chair Powell stepping down would be a good thing. Take a look at how U.S. futures are now pricing in all of these comments. Of course, we had already seen U.S. traders struggling with how to price in the on and off tariff campaign that we've seen from President Trump. We are now seeing futures to the downside. They fell on Friday from all-time highs already. We are in earnings seasons. The 6 biggest U.S. banks are set to report earnings, and analysts are predicting trading revenue will increase. Of course, we continue to see a lot of volatility, especially in the Treasury space as well. Treasury is falling for 2 consecutive weeks. What will be crucial for this week, including for the U.S. dollar, will be the CPI numbers. Consumers in the U.S. probably experience slightly faster price growth in June, and of course, the inflationary effects of the tariffs are in focus. Staying now with the trade negotiations, U.S. Secretary of State Marco Rubio saying that a summit between Presidents Trump and Xi is likely after the top diplomats from the 2 countries met in Malaysia. Let's bring in our China correspondent, Min Lo. So, Min, what came out of those discussions, first of all, between the Foreign Minister Wang and Secretary Marco Rubio?
Yes, actually, we don't know a lot of the substance of the discussion that took place on Friday. The Chinese Foreign Ministry readout simply said that the meeting was constructive and positive and pragmatic, saying that both sides had agreed to keep strengthening communications at all levels to manage their differences and to deepen cooperation. Marco Rubio said that there could be a Trump-Xi meeting at some point. He didn't give a date, and that's pretty much all we know about that meeting. They met for exactly an hour. I think the biggest takeaway is the fact that the 2 men met at all. This is the highest level meeting between the 2 sides since Trump came into power. Secretary of State Marco Rubio and Chinese Foreign Minister Wang Yi. Of course, the biggest sort of sticking points between the 2 sides is the trade issues, right? But Marco Rubio doesn't exactly have the power to decide on things when it comes to trade. And Howard Lutnick has said that he will be kickstarting another round of trade negotiations with China sometime in early August, just ahead of that planned expiry date of the temporary reprieve. But for now, it does seem like there is some stabilization of ties after both sides had agreed to stick to those terms that were agreed in Geneva and London. The fact that these 2 men sat down and met face-to-face for the first time, that's also a good sign that they're at least speaking to each other. Bear in mind, Marco Rubio has been twice sanctioned by China for his comments on Xinjiang and Hong Kong, but China has said that that shouldn't affect any official exchanges between the 2 sides.
China's also due to release a tranche of trade data for June later today. Are we expecting to see the improvement thanks to the trade truce?
Yes, we're expecting to see a little bit of improvement. If you look at export numbers, the consensus now is about 5% in June, better than the 4.8% the previous month. Bloomberg Economics has a higher forecast of 6%. And this, as you said, is thanks to that temporary truce that was reached in mid-May. And high-frequency data suggests that we did see a rebound in exports since late May onwards. You look at imports expected to turn positive 0.3% for the first time since February. And, you know, a part of it is the trade truce. It's also the stronger sort of global economic recovery. If you look at the PMI data from from the US and Eurozone, the softness in PMI has started to slow down, or the pace of the decline has started to slow down. And you look at Japan, we saw the PMI expand for the first time in a year. South Korea's exports numbers for June was also very strong, and that's always a bellwether for Asian exports. And I guess the biggest worry now is what happens after August 1st, when the temporary reprieve in those levies for a lot of countries will end, and the tariff differential between China and other countries still remains very high, and that could continue to pose a challenge for Chinese competitiveness, Chinese exports competitiveness.
Our China correspondent Min Lo there. Well, Australian Prime Minister Anthony Albanese heads to Beijing today, saying he wants deeper cooperation with China and sustained bilateral relations. For more, let's bring our economy reporter, Spuddy Pandy, who joins us now for more. So he's been in Shanghai, which obviously sort of focuses more on the commercial element, arguably kind of an easier part in terms of low-hanging fruit. What are we expecting? What's sort of been achieved so far, I guess?
The timing of his visit is a bit unfortunate, I would say, especially given the conversations we have heard from the U.S. around China and Taiwan. that has kind of taken the attention away a little bit, at least in the local media, around what Albanese is doing in China. And he really does want to improve the trade and economic relationships with China. Tourism is a big thing that he wants to focus on. Tomorrow is a big day where they are doing a CEO roundtable. There is a delegation that's traveling with him, which includes CEO of companies like BHP, Fortescue, Macquarie, HSBC. So that is one of the big things that's happening. There is a supply chain expo that China is hosting that's happening this week as well. So he is flying to Beijing today, and he's going to be in Beijing for a couple of days, and then he's going to Chengdu, where there's going to be panda diplomacy. So there's going to be a lot of focus from Australia's perspective on trade and tourism, but definitely security is also something that is getting a lot of attention.
So, Heidi, of course, we are now seeing Australia-China relations warming up a little bit, but just a few years ago, there was a huge spat, geopolitical and trade, and we saw China really attack Australia in terms of bans and tariffs on products. How much did Australia manage to sort of veer away from this dependency on Chinese trade, this dependency on the Chinese economy? And how tricky is now the situation given that President Trump's administration is also targeting trading partners with tariffs?
Look, Australia was able to find other markets, but we should remember that China is a big consumer market for the world, not just Australia. They remained the biggest buyer of Australia's iron ore, which is our top export. And that was a big reason why Australia kind of was unscathed out of this difference that we had with China just after the pandemic. So China continues to be our #1 trading partner. They take up a quarter of Australian exports. So they are significant, and it will be hard to find markets that would completely replace China as a consumer.
Bloomberg's Swati Pandey there with the latest on the China-Australia relationship. And other stories that we're following at the moment, the U.S. government is reportedly pressing Japan and Australia to clarify their roles in the event of a U.S.-China trade war, China war over Taiwan. According to the Financial Times, Albridge Colby, the Undersecretary of Defense for Policy, has been pushing the issue with officials from both countries in recent months. The move is reportedly upsetting the two key allies in the region. NVIDIA CEO Jensen Huang says the U.S. government doesn't need to be concerned about the Chinese military using U.S. technology to improve their capabilities. Huang told CNN that China will avoid the technology because it can't be relied upon and may be limited at any time. Chinese military adoption is one of the key concerns Washington has raised in putting increasing restrictions on tech exports to the rival. Iran's foreign minister says the U.S. is trying to restart nuclear talks, but stressed his country is in no hurry to engage. Abbas Araghchi said in a televised remark that Iran had received multiple messages and is weighing options. He added that Iran needs guarantees it won't be attacked again if the talks don't succeed. Meanwhile, Araghchi will be visiting China on Monday for the Shanghai Cooperation Organization Summit. An initial report on the Air India flight that crashed last month says fuel supply to both engines was switched off a few seconds after takeoff. The Boeing Dreamliner crash killed all but one of the 242 people on board. Bloomberg's aviation reporter Danny Lee joins us now from Hong Kong with the latest. Danny, tell us more about what investigations revealed.
Yeah, Shery, good morning. Late on Friday night, we got this 15-page preliminary report, and the document, once we poured through it, you could get a firm sense of just how troubled this aircraft was immediately after takeoff. And investigators have zeroed in on this fuel switch, a fuel switch which feeds jet fuel into the GE Aerospace-made engines. And it's fascinating because part of the document that was released, there was a transcript and there was a conversation between the two pilots. One remarked to the other, asking why did they cut the fuel supply, the fuel switch, and then to the other, which it denied. And so we don't know who was talking, but it's a significant piece of the conversation during a key moment of flight where you need the fuel, you need the power in order to get the plane off the ground. And so there are now two key questions about who touched a fuel switch and why.
My understanding, very rudimentarily, it's not necessarily that easy to switch it off, right? So is there a scenario where it's human error? Is it more likely to be deliberate or something to do with the aircraft itself?
Yeah, these are a kind of narrowing set of lines of inquiry that the investigation will take, right? I mean, for example, the pilots on board, we know that the less experienced pilot, the one who had less flying hours, was in command of the plane, supported by the captain on board. So I think investigators will want to try to get to the bottom quickly of who made the move with the fuel switch because of the very delicate nature of where this plane was as it was about to fly. But it was fascinating that the report also highlighted that back in 2018 there was an emergency or special airworthiness bulletin that was released to airlines talking about how this fuel switch could disengage. But further in this report for Air India, it had replaced this fuel switch console as late as 2023. So whether this was an issue or not, investigators tried to move away from that kind of possibility. But still, after the report was released, we heard from the US officials who tried to make clear that to all airlines who operate the 787, there was no concern with the fuel switch disengagement, but there'll be more to come on this as well.
Danny Lee, our Bloomberg aviation reporter there with the latest. And more ahead on the Asia trade. This is Bloomberg.
Take a look at how Japanese assets are setting up. We saw already 2 sessions of losses for the Nikkei. The Japanese yen has been weaker against the U.S. dollar as well. President Trump, of course, ramping up his trade rhetoric. We have new announcements of tariffs. We are watching the JGB space as well. We saw it under pressure last week on concerns about fiscal spending, despite the fact that we got an okay 20-year bond auction. Not necessarily strong, but better than the concerns about the demand when it comes to the long end. Of course, we're also watching Secretary Scott Bessent of the U.S. visiting the World Expo in Osaka later this week and what that will mean for trade negotiations going forward. Let's get more on Japan's position in these negotiations with the U.S. with, of course, the Sunday upper house election as well here in Japan. Tobias Harris is founder and principal at political risk advisory firm Japan Foresight. Tobias, always good to have you with us. I mentioned Secretary Bessent coming to Japan, but of course we haven't heard about any confirmed trade talks for the time being. But how consequential could this be at this critical time when we haven't necessarily seen anything concrete out of the talks?
I'm not really expecting that we're going to see much move until next Sunday's elections are over. That and then you have a 10-day window until August 1st, and the new tariff rates kick in. I think the Japanese government is just not going to be in a position to want to announce anything. The Prime Minister, of course, in his rhetoric in recent days is really leaning into the extent to which his government has defended Japan's national interest in the talk. So I think the priority really is going to be on, as soon as July 20th passes, they're going to really focus on trying to get something done in those waning days.
We heard from President Trump just minutes ago speaking at Joint Base Andrews as well, talking about Japan and how Japan exports so many cars into the United States. So that seems to be his biggest beef at this point. At what level can Japan really compromise with the Trump administration when it comes to the auto sector?
I mean, that has really been the question, I think, for months. I think, with round after round of talks, I think the fundamental question has been, just how willing is the United States even willing to compromise on the auto tariffs, which Prime Minister Ishida has made very clear is a non-negotiable position. Now, there might be some room to accept a reduction in tariffs, but I'm not clear that the Trump administration is really even that willing to offer that or to offer a meaningful concession to Japan as far as auto imports to the United States are concerned. And so that really is where the impasse is. And I don't see, we certainly haven't really heard much from the Trump administration when it comes to offering something to Japan, some sort of face-saving gesture that would allow Ishiba to maybe offer some concessions in other areas and then get something in return. And until we really see that, the United States has not really said that it's prepared to compromise on automobile tariffs. And if the goal is to buy fewer automobiles than from Japan, then there's every reason to think that they'll try to keep those tariffs in place.
Tobias, even if a deal is reached, which is all well and good, there's a growing concern, I think, from negotiating parties that whatever deal is reached, the sands may shift under them again, right? How reliable are these negotiations? And do you think that mindset of, well, what's the point of negotiating when things are changing from hour to hour, from day to day when it comes to what we're hearing from the White House?
I think there's been some frustration on the Japanese side, of course, over the course of negotiations, trying to figure out early on what exactly the U.S. negotiating position was, what exactly was on the table. I think now it's maybe less about, what is the U.S. negotiating position and more, is there any way of getting a more reciprocal mutual agreement that gives Japan something in exchange for the concessions that they're expected that they would have to make the U.S. happy. The real question, I think, when it comes to the stability of talks after the upper house elections next week is that if it turns out that the ruling LDP Komeito coalition loses its majority in the upper house, does Ishiba hold on? If he doesn't, he's going to be a caretaker, and is he going to be able to negotiate? Is Trump going to want to negotiate with the caretaker? Is the LDP going to want Ishiba to negotiate as a caretaker, or is everything going to be on a hold until Japan's domestic political situation sorts itself out? I think that's a really big question going forward.
Tobias, we've also seen the likes of the EU, for example. Certainly China has been at the forefront of the strategy of trying to diversify trading partners and looking to other partnerships and alliances. Is that something that we've seen from Japan as well, notwithstanding that obviously it's quite difficult to replace the market size and sheer scope of the United States?
Well, I think it's been interesting to see over the course of this upper house campaign this is actually an issue that Ishiba has been attacked on and had to go on the defensive about, where opposition parties have been saying, why aren't you talking more to the Europeans? Why aren't you talking more to other Asian countries? We have to defend a global free trade regime. You need to talk to other partners to do that. And Ishiba has said, no, everyone's situation is different. I have to focus on the United States first. And to some extent, this looks like the Abe playbook back in 2017 when he wanted to make sure that he was on good terms with Trump, and then turn to let's revive TPP, let's get a deal done with the Europeans, and so on. And maybe he's trying to do that first, where the United States, it's the biggest question, it has to be resolved. He's putting all of his efforts into there, and then assuming he holds on, once that's out of the way, then he maybe focuses more on, okay, let's have some sort of expansion of TPP, let's maybe try to bring TPP and the EU closer together, and so on. But for the moment, we really have not seen that kind of commitment from the Ishiba government.
Tobias, it's always good to get your thoughts. Founder and principal at Japan Foresight. We do have breaking news out of Japan as well. We're getting the core machine orders now contraction of 0.6% for the month of May, month-on-month. This is a smaller contraction than was expected, also a smaller contraction than more than the 9% that we saw in the previous month. Year on year, though, below expectations, growth of only 4.4% for the month of May, which is also a deceleration from the previous month, below economists' expectations as well. Of course, core machine orders very important for that sentiment of investment coming from major companies. And we're seeing a little bit of a mixed picture when it comes to month-on-month and year-on-year number, but a slowdown when it comes to the annual figure of growth of only 4.4%. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Of course, we've got some upcoming earnings releases to focus on, and TSMC is one of them. They'll headline this week's results when it reports on Thursday. Bloomberg Intelligence says it will likely hit the high end of its second quarter sales guidance, with AI-related orders from NVIDIA and Intel. Its expansion plans will also be in focus after the US Senate passed a tax bill that would make it cheaper for chip makers to build plants there. Meanwhile, Indian software leaders will also offer a peek into the future of South Asian tech. Jefferies analysts expect quarterly sales across computer services and IT firms to slide, with softer seasonal performance seen as the main drag on earnings.
And this is a picture across markets early in the Asia session. Of course, we're awaiting the Japan Open, with futures now trading to the downside of 0.5%. After 2 sessions of losses already, we had seen President Trump, of course, ramp up the trade rhetoric, new tariffs announced, and the Japanese yen weakening on the other side, with some haven demand on the U.S. dollar, seeing its best week since February. Secretary Bessent coming to Japan for the Osaka World Expo. We'll see if there are any trade talks during that time. U.S. futures down 0.4% after stocks already fell from record highs. It's the beginning of earnings season in the U.S., with the 6 biggest U.S. banks expected to start reporting starting from Wednesday. Analysts now predicting trading revenue increases. Not surprising, of course, a lot of volatility in the markets. Sydney futures also looking to the downside of 0.3%. We'll be following the offshore yuan as well. We saw some gains in the last couple of sessions. Secretary Marco Rubio now saying that a summit between President Trump and Xi Jinping could be likely. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as investors digest new trade uncertainties. Of course, we have seen President Trump ramp up his tariff rhetoric. We have new announcements on the European Union and Mexico as well. So take a look at how U.S. futures are trading to the downside of 0.4%. After, of course, already falling from record highs last week, we had seen a good run for the U.S. dollar, the best week since February on that haven demand, the euro holding steady on the other side. You can see the Mexican peso at that 1866 level. We have heard from President Trump that we could see those 30% tariff rates for Mexico and the European Union beginning August 1st. We are also going to be watching Secretary Bessent headed to Japan for the Osaka World Expo later in the week. Whether or not he does actually have a trade talk with his counterpart is a key question right now. The Japanese market coming online with the Nikkei now under pressure. Of course, we had seen it lose ground for the last 2 sessions. The Japanese yen also weakening on a stronger U.S. dollar. On the other side, we can see also how the JGB market is holding up. It fell in the last session on concerns about fiscal spending. And you can see, of course, the Korean market also coming online at this point with a little bit of downside for the Kospi. The Kosdaq, though, gaining ground at the moment. And all of this as we're also getting the latest lines from Singapore. GDP numbers for the second quarter rising 1.4% quarter on quarter. The estimate was for growth of only 0.8%. Also, when it comes to the year-on-year number, we're talking about growth of 4.3%, which is also above economists' estimates. Of course, we have seen a lot of pressure for this, a very export-reliant economy. Still, the Singapore government maintained their forecast for 2025 GDP growth at 0 to 2% because of the global tariff war. Right now, we're seeing second quarter GDP rising 1.4% quarter on quarter, and also beating when it comes to the annual year-on-year number. But let's turn to what's happening on the trade front when it comes to Australian Prime Minister Anthony Albanese heading to Beijing today as well, given, of course, that we are expecting those negotiations when it comes to China and the Australian relationship as well. We're also focused on President Trump saying that the U.S. is in the midst of negotiating trade deals across the EU and other nations as well. Take a listen to what the president had to say.
The European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't.
This coming after he unleashed his latest tariff ultimatums, threatening that 30% rate for the bloc and also Mexico from August 1st if they can't negotiate better terms. Bloomberg correspondent Stephen Engel joins us now with the latest on this. Should we start with the European Union? I mean, we heard also from sources that they're trying to turn to other trading partners in order to counteract this pressure coming from Washington.
That's right. There's been a lot of ups and downs with the negotiations with the European Union, no doubt. And I think the European Union is looking at different options for sure and mitigating factors. And also, according to Ursula von der Leyen, the European Commission president, they are essentially looking at other options, to mitigate, including Japan and Canada. They're also, which she said, extending the suspension of trade countermeasures against the U.S. until August 1st, that to allow further talks. They were due to snap back into place, those countermeasures on U.S. goods back into place on Tuesday, but they'll give it till August 1st. The talks between the EU and the United States, they've dragged on and on. We've gotten different false dawns of optimism. Right now, they're stuck on several issues, including automobiles and tariff rates on agriculture. Now, those countermeasures that I talked about would hit about $24.5 billion worth of U.S. goods, and apparently there's another list in the works that are ready to be submitted to EU member nations to consider, and that is if things really go pear-shaped by August 1st, of upwards of $84 billion and some export controls to the United States. Now, the EU is seeking tariffs of no higher than 10%. Now, if you look at the gyrations of what Trump has said and what he's applied, it's gone up and down. That initial tariff was 20%. It fell back like the rest of the world down to 10%. Trump got sort of frustrated with the pace of negotiations. He threatened 50%. Now it's back to 30%. And who knows where it's going to end up as the EU seeks no higher than 10%. And then you have to also consider there's these separate sectoral tariffs on steel and aluminum, pharmaceuticals, and other products. So again, it's a tenuous time right now. Oh, you mentioned Mexico. They also essentially are getting hit with a 30% tariff. That was announced earlier. But again, there's room for negotiations until August 1st. Trump, in his letter to the Mexican president, acknowledged that Mexico has made progress on the fentanyl and border issues, but it's not enough. Again, so they're going to keep on working at this, according to the Mexican president, who you see on the screen right now. They're projecting confidence it will strike a deal with the United States. That 30% tariff, though, however, would not necessarily apply to U.S., Mexico, Canada agreement compliant goods. But there's a lot of room to go from now until August 1st.
A lot of room to go, a lot of tariffs to consider, different sectors. I mean, you said it, Steve. I mean, how does Washington even have the manpower to go through so many deals at the same time, right? I mean, and I want to hone in on the U.S.-India talks, on the U.S.-South Korea talks as well. Have we seen any progress on those fronts?
Yes, there's progress, but there's been fits and starts with India, like we've seen with the EU, like we've seen with Mexico. India, there's growing confidence right now, as we've had in the past, of a possible interim deal being struck. And that would be sort of a framework that would allow a negotiation to go deeper into specifics down the road. As you rightfully said, there's so many different corresponding negotiations going on. The South Koreans were just in Washington. The Japanese have been in Washington many times. We're hearing Europeans are coming over. So, yes, there's absolutely a lot of different negotiations going on. India initially hit with that 26% tariff. That interim deal that we're hearing from sources possibly would lower that to below 20%. But again, I talked about those fits and starts. It was just earlier last week, when Trump threatened an additional 10% on India because of its membership in the BRICS nation, which came out with condemnation of Trump's policies in the Middle East, as well as the unilateral approach to trade. So there's lots of uncertainty. I want to get quickly to South Korea as well, because their trade minister, Yo, has wrapped up talks in Washington, D.C. He's now back in Seoul. He met with Jameson Greer, the U.S. trade representative, as well as the Commerce Secretary Howard Lutnick. So high-level talks, hoping that they're going to get progress as well. This is what Trade Minister Johan Koo said. We're focused on swiftly reaching a landing zone. His words, there's now trust built to accelerate negotiations. He says those trade talks have entered a critical phase. Trump, as we heard at the top of the show, did acknowledge that the South Koreans really want to make a deal. We'll have to see on that one.
Right. Our Chief North Asia correspondent Stephen Engel there with the latest on all of those trade negotiations ongoing right now. Let's bring in Vasu Menon, Managing Director of Investment Strategy at OCBC, to discuss what the market implications will be here. Vasu, great to have you with us. Of course, we continue to potentially price in a new trade deal coming every other week or so. How much of this is already, as I mentioned, priced in by the markets? Could we see some more upside if we do in fact get a South Korea trade deal? And how much is being discounted by the starts and stops of these ongoing talks?
Well, at this juncture, the markets have been very resilient. The markets are very hopeful that, Trump will backtrack, as he did in April, that, the tariff rates that you've seen so far, that he said he will implement on the 1st of August, may not come through across the board. They'll come through in some cases, but, for the major trading partners, the markets are hopeful that there'll be some concessions, that what he's doing is really a negotiation tactic, and that hope is going to, cause some degree of market volatility. It's going to keep the markets supported. There's a lot of liquidity on the sidelines supporting the markets as well. But, a lot hinges now on what Trump will do August 1st. That is, if we even get a clear answer by August 1st, it's possible that, the negotiations could go on for weeks and perhaps even months. And if that happens, then again, the markets are going to remain hopeful that the extended deadlines will mean that some kind of deals could be struck, concessions could be given. And, as we talk more and more about the tariffs and the trade deals, I think that becomes more and more discounted by the markets. And, markets only get shocked if they're surprised by news. But tariffs are no longer big news for investors. They've been around for quite a while in terms of making headlines, and it's slowly being progressively discounted. And against a backdrop of hope that Trump will not go to the extreme.
Or the taco trade, where traders are thinking he'll back down eventually anyways, right? Especially when it comes to U.S. markets, it seems they've been totally discounting any bad news, but really trying to jump at any positive news coming from these trade negotiations. Do we have space for more upside, and how much will U.S. earnings season factor in?
Yes, you're right. I mean, the U.S. stock markets have hit new highs. But let's put things in perspective. While the U.S. stock market has hit new highs, in relative terms, it still underperformed other regions. So if you look at the MSCI USA index, for example, which is what a lot of global fund managers look at, I believe it's up something like about 7% year to date. If you look at how Europe has done, it's done a lot better. I mean, it's in terms of the MSCI Europe index in US dollar terms, it's up more than 20%. Hong Kong is up more than 20%. Asia ex-Japan is up, I think, something like 15%. China, somewhere around that region as well. So other markets around the world, other regions around the world have actually performed better than the US stock market, despite the fact that the US stock market is making headlines in terms of its new highs. Whether the US stock market will hit higher from this level, I think it's possible. We can't discount it. Don't forget that Trump's tax bill will provide some stimulus for the economy. And as I said earlier, markets are hopeful that he will not take things to the extreme as far as tariff rates are concerned. And of course, there's a potential for Fed rate cuts sometime perhaps in the fourth quarter of this year. In addition to that, lots of liquidity on the sidelines. So there's enough, I think, to keep the markets supported, maybe even send it higher from current levels. But it will not be a straight line progression.
Especially when it comes to the Fed trajectory, as you mentioned, with the CPI numbers coming out this week, right? How consequential would that be, not only for the U.S. market, but also for what the dollar trade does? It was really interesting that we saw the best week since February last week, because we have seen a lot of support for Asian currencies because the trend has been pretty different.
That's right. I think, the CPI numbers, I don't think it's going to be very consequential. It's something the Fed will take into account. We've not seen the full impact of the tariffs come through in the CPI numbers. The markets are expecting the CPI numbers, the core CPI numbers, to bump up slightly from 2.8% to 2.9%. That I don't think is going to make a big difference. The Fed will take note of it. But, I think what the Fed will want to know is what the tariffs are that Trump will eventually impose and how that will eventually filter through the CPI numbers in time to come. So I don't think the Fed is going to move just yet, even in this July meeting. It'll be still wait and watch. Now, as far as the US dollar is concerned, yes, it's seen some kind of a rebound in the past week. But if you look at it year to date, from the peak this year, the DXY index is down almost 11%. And that's one of the sharpest, starts to the year, sharpest declines in a year, year to date, since 1973. And our view is that the dollar could see further downside on the back of potential Fed rate cuts, concerns about fiscal policy in the US, concerns about slowdown in the US economy, concerns about the US losing some degree of exceptionalism. All those will continue to play on the dollar. We feel, you'll see occasional rebounds, but it does not change the trajectory just yet for now.
Any change in trajectory for the Chinese economy? We do get those trade numbers today, but at a time when we also heard from Secretary Marco Rubio that we might see Xi Jinping-Trump summit later this month. How much more upside would that give, that not only to Chinese assets, but to other Asian assets that, of course, are very exposed to Chinese moves?
Well, if we see a Trump Xi Jinping summit, I think that's going to be very positive news for the Chinese economy, Chinese stock market, and Asian stock markets. I think we've been waiting for this for a very long time. It could signal that, we could get a nice trade deal coming out of the US and China negotiations. That's what the markets are going to be hoping for. And don't forget, I think as far as China is concerned, they've not fired all their bullets. They've got quite a lot of dry powder still on the sidelines. They've got a very strong balance sheet. Inflation is not a problem in China. They can afford to stimulate the economy. They are doing it, but they've not, gone full on, I feel. And they could do a lot more once there's clarity on the trade front. They're probably waiting to see what happens on the trade front before they do a bit more. So, there's hope for the Chinese economy yet on the back of stimulus, on the back of trade talks. And we are positive on China. We have a overweight call on Chinese equities. We've had it for several months, and the strong rally in Chinese equities and Hong Kong equities have vindicated our call on Chinese equities and Hong Kong equities.
Right, Vasu Menon will be watching that China Market Opens, Managing Director at OCBC. Good to have you with us. We have more ahead on the Asia Trade. This is Bloomberg. Australian Prime Minister Anthony Albanese heads to Beijing today, saying he wants deeper cooperation and sustained bilateral relations with China. For more, let's bring in Bloomberg's Michael Heath. And Mike, how consequential is this trip at a time when, of course, Australia faces increased pressure from its ally, the United States?
Yeah, Shery, I mean, look, it is a really important one. And the Prime Minister, as you sort of mentioned, he's headed to Beijing today. He was in Shanghai, and on Sunday he announced a bit of a tourism deal. And one of the elements of this trip is to try to deepen people-to-people ties. As we sort of know, the relationship between Australia and China is really heavily geared to iron ore and minerals and China's development. But as China's economy matures, services, Australia's actually a majority services economy too. Everyone always talks about the mining, but services actually dominate. So that's, I think, what the Prime Minister is trying to stress here. But you're right. I mean, even when Anthony Albanese gave a press conference late yesterday, there'd been some reports about, US pressure on Australia and Japan as well about what would we do in the event of, a Chinese attack on Taiwan and the US having to become involved. And also, again, this question of Australia raising defence spending, similar to the US has been putting pressure on Europe to contribute more to NATO. There's a similar sort of thing going on with Australia, even though Australia has been increasing its defence spending. So these sort of issues are, this Washington and I guess the change just under the Trump administration, it's overshadowing it a bit. But then tomorrow, Prime Minister Anthony Albanese is due to meet with President Xi and Premier Li and to have a significant business roundtable. So tomorrow is sort of probably going to be the peak time in terms of interesting detail to come out of the visit.
Mike, how well positioned is Prime Minister Albanese to be able to play both sides when it comes to those pressures, not only from Washington, as you mentioned, but of course Beijing? We have seen that warming up of relations between China and Australia, but they were strained for a few years.
Yeah, exactly right, Shery. And I think there's still a bit of residual upset on Australia's side there about what China did there, and that sort of restrains the Australian side somewhat in terms of how close they want to get. Ahead of Prime Minister Albanese's trip, there'd been talk about some more significant government-to-government agreements, and Australia seemed to be sort of shying away, wanting to keep the momentum of improving the relationship, but not wanting to go overboard. As to Prime Minister Anthony Albanese's position, it's very strong domestically. I mean, he won a landslide victory in May. He's in a fabulous position there, but the pressures in terms of China becoming more assertive in the region, the Trump administration also being more assertive, the face-off between the two, the issues over Taiwan, those geopolitical forces are getting much more intense. So while he's okay at home, that traditional Australian policy of trying to balance the two is getting harder and harder to do, and it's going to require some really nimble diplomacy from Australia and from Albanese to be able to keep that balanced.
Bloomberg's Michael Heath there with the latest on those conversations between China and Australia. And later this hour, we'll have more on the ongoing trade negotiations worldwide. We'll focus on what's happening between the European Union and the United States. We're joined by the European Commission's Competition and Sustainability Chief, Teresa Ribera. We'll also discuss their energy transition efforts with China. We have more ahead. This is Bloomberg. An initial report on the Air India flight that crashed last month says fuel supply to both engines was switched off a few seconds after takeoff. The Boeing Dreamliner crash killed all but one of the 242 people on board. Bloomberg's aviation reporter Danny Lee joins us now from Hong Kong. Danny, so what did investigators find?
Good morning, Shery. So we got this 15-page preliminary report late on Friday night, and when you read through the report, you could immediately get a sense of just how troubled this aircraft was almost immediately after takeoff. And investigators are zeroing in on the fuel switch which was turned off and then back on again. And it was a conversation, a transcript in the report between the two pilots, one highlighting to the other why was the fuel switched off, which deprived the aircraft engines of the fuel at the most critical phase of flight, has been raised. And so it does raise the question, two key questions of why the fuel switch was turned off or cut off, and then who made that call as well.
Wait, so how easy or difficult is it to switch off the fuel supply?
Well, it is actually quite difficult because you have to deliberately put some force on these fuel switches. And so, investigators will be trying to ascertain whether this was incidental, whether it was deliberate, or whether it maybe had been something wrong with the aircraft itself. But investigators and the manufacturers, they've been at pains to try and rule out the possibility of any aircraft-related issue, and there have been subsequent bulletins or updates to airlines to try and reassure airline operators of this. But as we do progress with this investigation, there is this significant focus on the pilot's actions, and hopefully we'll get more details in the coming months of who potentially put this switch off, and a crucial 10 seconds of then putting them off back on again. So there'll be more to come on this as the investigators focus in on what really went wrong here.
As we await for more information then, anything else that caught your eye from the initial reports?
Well, investigators are still seeking more evidence, and there are still many unanswered questions in relation to this accident. And of course, for Boeing and for the U.S. Authorities, they are trying to play down the idea that there was something wrong with such an advanced modern jetliner, and so we did get an update from U.S. authorities trying to play down the idea that this fuel switch was troubled, and therefore tried to reassure operators that there was nothing wrong with the plane.
Bloomberg aviation reporter Danny Lee there. And other stories that we're following at this hour, Vietnamese media saying that Prime Minister Pham Minh Chinh has called on U.S. businesses to support his country's attempt to secure a final tariff agreement with the Trump administration. Chinh reportedly made the request during a Friday meeting in Hanoi with the U.S. ASEAN Business Council. Bloomberg earlier reported that President Trump's 20% tariff rate caught Vietnamese leaders off guard. The UK's King Charles will host President Trump for a state visit in September at Windsor Castle. Trump had warmly welcomed the offer of another state visit to Britain when he was handed the invitation in February by UK Prime Minister Keir Starmer. Trump's state visit will be the third such event of Starmer's premiership after French President Emmanuel Macron and the visit of Qatar's Emir. Later this hour, European Commission Executive Vice President Teresa Ribera joins us live to discuss the EU's trade negotiations with the US and their energy transition efforts with China. We have more ahead. This is Bloomberg.
The president has a very positive working relationship with President Xi, and obviously the relationship I have with the foreign minister should reflect that. So we acknowledged, there are some issues that are going to we have to work through, not just beyond trade, but others. But I thought it was a very constructive and positive meeting and gave us a lot to work on.
U.S. Secretary of State Marco Rubio speaking after his Friday meeting with Chinese Foreign Minister Wang in Kuala Lumpur. For more, let's bring in our China correspondent, Min Lo. Min, so what came out of those discussions?
Yeah, you heard Marco Rubio there saying that the meeting was constructive and positive. The Chinese side also said the meeting was constructive and pragmatic, and both sides agreed to strengthen communications at all levels to manage their differences and to deepen cooperation. Marco Rubio also saying that this meeting could eventually lay the groundwork for a Trump-Xi summit sometime soon. He didn't give us a timing for when that might happen, but aside from that, we didn't really get a lot of substance in terms of what the two sides discussed, and I guess possibly a good sign as well that it seems like both sides had pretty consistent messaging about how the meeting went. If you remember, some time back we have US and Beijing always contradicting each other in terms of their messaging, but beyond what they spoke about, of course, as Marco Rubio said, a lot of sticking points, especially when it comes to trade, and Marco Rubio doesn't exactly have a lot of power to decide on trade issues. Scott Bessent and Howard Lutnick will be meeting with their Chinese counterparts sometime, maybe in a few weeks' time, to discuss another round of trade negotiations. But of course, the other sticking points, things like the South China Sea, Taiwan, all of these long-standing issues still at play here. It's a good thing that both sides, the two top diplomats of both countries, finally met for the first time since Trump came into office. And it does seem like there is some stabilization of ties between two sides, especially after both countries agreed to stick to the terms of the deal that was reached in Geneva.
Will that be reflected in today's trade data?
Yes, we are expecting today's export numbers to be slightly better than the previous month. So in June, expected to be at 5%, although Bloomberg Economics have a higher forecast of 6%. The month of May, we had a 4.8% print, so slightly better thanks to the trade truce that was reached in mid-May. And high-frequency data also shows a rebound in exports. And you look at the imports number, 0.3%. That's the first positive print since February of this year. It's also supported by the economic recovery recovery around the world. If you look at the PMI data, the decline in the PMI data in the Eurozone and in the US has been declining, at least the pace of that has been declining. Japan as well saw an expansionary print in PMI for the first time in about a year. South Korea had very strong export numbers as well in June, and that's always a bellwether for Asian exports. So I think looking forward now, the concern is when August 1st comes around and when other countries get their tariffs imposed, especially when you look at countries like Vietnam with the 40% on transshipped goods, that could have an impact on Chinese exporters. And as well, if you think about the global sort of reciprocal tariffs and how the difference in rates between Chinese tariffs versus other countries still remain, that big gap there, that continues to pose a challenge for Chinese exporters, could continue to affect their competitiveness globally. And if it does solidify this shift in supply chain for the longer term away from China, that's going to pose a challenge to China's growth and employment prospects. So it's very urgent for China to continue to support domestic consumption to ensure the economy's resilience.
Bloomberg China correspondent Menon Lo there with the latest on that trade relationship, as we're also watching Chinese President Xi Jinping signaling action to address bruising price wars that have plagued much of the nation's economy. Bloomberg Opinion columnist Shery thinks these price wars are actually far more dangerous than U.S. tariffs. Shery now joins us from Hong Kong. Shery, why? Why are these price wars so detrimental to the Chinese economy?
Because it creates a deflationary spiral into the Chinese economy. If you look at the PPI producers' price inflation, it has been the negative territory for almost 3 years. And what we have been hearing is that China is going to enter the next decade just like Japan. And what we know from Japan's experience is prolonged deflation.
The government has increased its focus on this problem. Have we seen any sort of real measures against these price wars?
So far, there's a lot of window guidance. I mean, at the epicenter of this price war is basically the solar and EV industry. And recently, local medias, they were reporting that the solar glass makers, they promised to cut production by 30% starting this month. And as for EV makers, they promised to pay their suppliers, their upstream suppliers, within 60 days. And so far, the EV makers basically are delaying their payments to their suppliers to conserve costs. But nothing like specific, like hardcore rules from the government so far.
We have seen President Xi trying to pull China out of deflation in the past as well. Have any of those efforts years ago worked, and is there any takeaway from that?
So President Xi actually has a very good track record of pulling China out of deflation. In 2015, he had this so-called supply-side reform, basically cutting down production in the steel and the coal industry. And back then, China had 54 months of deflation, producers' deflation. And within half a year of his so-called supply-side reform, China went back into inflationary territory again. But I think this time it's going to be a lot harder because last time, we all know, coal and steel, they were mostly like produced by state-owned enterprises, whereas this time, solar, EV, e-commerce companies, they're mostly privately held. So the government has to do a lot of coercing and window guidance to force private companies to cut production. Another problem is the local incentives are misaligned. I mean, if you look at the EV makers, right, like a lot of local governments, they have been serving as sort of venture capitalists, promising to give EV makers money, but in return, they have to open local factories. And the so-called Hefei model has been very detrimental to China's car industry because if you look at the number of car makers, there have been 50, 60 manufacturers over the years, even though more than half are subscale and should have exited a long time ago. Another problem is stimulus, the demand. In 2015, the supply-side reform was accompanied by a huge so-called shantytown redevelopment program, basically China pumping money into the housing sector. If China wants to come out of the deflationary spiral again, we have to see that. We have to see that the government needs to put in stimulus to stimulate the housing demand.
In the meantime, though, investors seem to be pricing in those efforts by the government to pull China out of deflation. We are seeing some of those sectors that you already talked about, like auto, EVs, actually getting more inflows from traders. When it comes to the broader market implications and how investors price China, what will be the ramifications long term?
I think it's quite interesting, especially when you look at the onshore stock market. They have a lot of industrial companies, right? And what we are seeing is that the A shares haven't been doing as well as the Hong Kong-listed companies, the H shares. And if China is really intent on doing this supply-side reform again and perhaps pumping money into the housing sector again, what you might see is that the A share will rally a lot faster than the H shares. That's why people in the mainland, they're getting quite excited. But it really depends on whether the government is actually going to do it again.
And how does that really compare to the pressure that we're seeing from these tariff negotiations from Washington on geopolitics versus the domestic dynamics already at play that investors are factoring in?
I think for Asia, mainland Chinese stocks, tariffs don't really matter that much anymore because the stock market is mainly driven by local investors, right? And China's exports to the U.S. accounted for only like 2-3% of GDP last year, whereas the price war, the domestic ultra competition among companies, it's very detrimental. I mean, if you look at the company earnings, they are all nominal, right? So if the economy is in the deflationary zone, that means year after year the earnings have to decrease, and that's really bad for stock investing. So I think that is basically the number one threat to the Chinese economy right now. I mean, really, the one factor that can hurt China is China itself. It's nowhere else.
And good point. Shery Ran, always great to get your insights. Bloomberg Opinion columnist there with almost everything on the Chinese economy and the markets as well. And other stories that we're following at this moment. NVIDIA CEO Jensen Huang says the U.S. government doesn't need to be concerned about the Chinese military using U.S. technology to improve their capabilities. Huang told CNN that China will avoid the technology because it can't be relied upon and may be limited at any time. Chinese military adoption is one of the key concerns Washington has raised in putting increasing restrictions on tech exports to the rival. Iran's foreign minister says the U.S. is trying to restart nuclear talks, but stressed his country is in no hurry to engage. Abbas Araghchi said in televised remarks that Iran had received multiple messages and is weighing options. He added that Iran needs guarantees it won't be attacked again if the talks don't succeed. Meanwhile, Araghchi will be visiting China on Monday for the Shanghai Cooperation Organization Summit. French President Emmanuel Macron is promising a new and historic effort to increase defense spending. He said in a speech that he will double the annual defense budget to $75 billion by 2027, which will require increases of around $4 billion in the next 2 years. Macron says the move seeks to counter an acceleration of threats to freedom in Europe and the risk of outright war in the coming years. South African President Cyril Ramaphosa has suspended a key ally accused of sabotaging a probe into political killings in the country. The nation's police minister has been placed on special leave after Ramaphosa announced an inquiry to investigate the allegations. The police minister has been accused of seizing about 120 open case files connected to political killings and pushing to disband the team tasked with the probe. Take a look at how oil is trading at the moment. Of course, we had seen it a little bit more steady in the past few days, despite the fact that President Trump escalated the trade war. Of course, we do have those 30% tariff threats on the European Union and Mexico. We're still seeing crude and Brent gaining about 0.25% at the early Asian session. We have seen oil futures remain more than 5% lower this year, though, because now, of course, we are contending with supply concerns, and not supply concerns, but more demand concerns, given, of course, the ongoing tariff threats and perhaps supply also coming from OPEC+. We have more ahead. This is Bloomberg. Take a look at how European futures are trading. We had seen downside in the previous session, of course, given the uncertainty around trade. You can see Stocks 50 futures also falling in the early Asian session. We have seen significant strength for the U.S. dollar, but right now against the euro holding steady after we saw the best week since February for the greenback. The EU and China, meanwhile, are holding high-level climate talks in Beijing, where cooperation on their green transitions is in focus. And this comes, of course, ahead of the EU-China summit planned for later this month. Joining us now from Beijing is Teresa, Ribera, European Commission Executive Vice President for Clean, Just and Competitive Transition. Thank you very much for making the time today. Just let us know how much progress have you made in these conversations and whether or not we can actually see a joint declaration on climate action when you get the EU-China summit later this month.
My great pleasure. Thanks a lot for inviting me. It's an important moment. I think that we share the views that we need to work in a much more sustainable economy, climate resilient, climate proof, and it's important to support the United Nations effort to coordinate this action. So yes, we need to explore where is the common ground between the European Union and China, knowing that we have to do our most so to stay within the Paris Agreement ambition. Let's see how it goes. For the time being, we are exchanging views, we are trying to identify how we can work together, and we are, of course, trying to figure out what are the other topics in the environment portfolio where we still have lots of things to do.
Lots of things to do when it comes to trade negotiations between the European Union and the United States as well. And we've heard from leadership in the EU that you actually want to engage with other partners. In that sense, how important is it to have these conversations with China, and where do you go from here, given that also the EU and China have their own trade issues in hand?
Trade provides prosperity, and I think it is a good thing. And in general terms, the global value chains are so obviously important for anyone that we should avoid any type of trade escalation, trade war among the different countries between the different geographies. But of course, we need to ensure a level playing field. We cannot keep our very open economy in Europe in such a context that there may be many people willing to be part of our single market, but that may not be working with the same rules, the same approach, so to reflect the right prices according to the real cost. So I think it is good to explore with the rest of the world how we can work together, and it is good to try to avoid this escalation with the United States. China is a great country. Of course, we need to be sure that investments flows are fair and that we do not harm each other. But I think that this is an ongoing conversation already, and we will keep an eye so to avoid any type of misunderstanding, any type of unfair between our companies in Europe and any investor willing to take part in this market in Europe.
When it comes to fair trade, what sort of message have you given to Beijing when it comes to overcapacity, not only on clean technology sectors, but also, of course, on rare earth exports?
There are two things that you are mentioning in your question. One of them is, yes, we need to ensure that the overcapacity, the production beyond what it may mean the domestic demand could overflow over markets. That could be pretty harmful for those that also produce in other geographies. So we need to be responsible, and these formal and informal conversations between the different governments is going to be key. Then there is another issue that you are raising in your question. What about the availability of rare earths, raw materials that may be critical for the new economy, both in terms of the renewable energy solutions or in terms of the digital transformation of our economies? And it should not be a bottleneck killing the possibility of prosperity all over the world. So that is another bullet where we will still need to talk, to discuss, to avoid harm.
When you talk about bottlenecks, how much is a concern what NVIDIA is doing in the tech sector as well? Of course, we have heard from the French Competition Authority reportedly collecting evidence of abuses of dominance by NVIDIA. How concerned are you?
I think that this is one of the most interesting things that we are dealing with, how the digital world raises new challenges in terms of fair competition. Competition is key to drive innovation, but we need to avoid getting these positions of dominance in markets where both households and industries may rely too much on very few players in these digital markets, including these materials that we use to provide the services, to provide the different platform services all over the world. So we need to be much more careful. But of course, when dealing with competition, we need also to respect the rights of procedure and to take any decision based on evidence. So whatever claim may come, we need to pay attention as competition services in the European Union, not to make any false step. But we are vigilant, so we try to apply in this context the same rules both in our European markets and to coordinate with other competition authorities all over the world.
When it comes to competition itself, given Washington's tariff threat of 30% by August 1st, is that going to hurt Europe's ability to compete in global markets in the United States? What are your expectations of what that could do to trade flows?
I think it is very bad news. I cannot understand how any country can think that getting isolated from the rest of the world is a good thing for its economy. To what extent fixing the way they want to produce, sell and cut the ties with other providers, suppliers all over the world is not good news for anyone. So I think that it is not good for Europe, it is not good for the United States, it's not good for anyone in the world, because the size of the American economy is so important that it would have an impact, of course. But it is also true that it represents more or less 17% of world trade. So we need to pay attention, to prepare, to be sure, to the extent possible, that this does not come a reality. But if it finally pitifully becomes a reality, we need to keep on working to build resilience and to build partnerships with the other partners, the other allies in the world that are also open and willing to apply the rule of law and to ensure that peaceful and fair trade flows keep on taking place.
What could those partnerships look like? Are we talking about more multilateral trade, or are you having separate conversations with individual countries to strengthen bilateral ties?
Both things are important. I think that the World Trade Organization stated the rules. It is true that there may be much activity right now in that context, but it is also true that the bilateral, bi-regional partnerships are already taking place. The European Union has signed trade agreements recently with different geographies. We entered into these conversations with Mexico, with Canada, with Mercosur, with Switzerland, with Norway. So I think that this is absolutely key. We need to explore how far, how deep we can go in the Pacific area with other countries. For instance, these conversations that are ongoing with India are quite important. And I think that we need to connect the different societies, the different consumers, but the different goods and services that are able to work, to trade in a peaceful and fair manner, so that we can keep on creating wealth on a fair basis.
When it comes to the anti-competitive subsidies from the Chinese state, specifically on clean energy, what are your specific concerns? And do you see those as distorting the European market? And how difficult is it to address those concerns at a time when you're having also difficulties on other trade relationships like Washington and pressure from many different sides?
Well, China has become a very powerful player in the global markets, dealing with green equipments, with green technologies. And to a certain extent, it shows to what extent when we concentrate our efforts so to provide the equipments, the goods of what it demands, the economy can become very, very positive for its own economy. And it is clear that the green transformation of the economy is one of the most relevant market drivers. So it is important to bet on green. We need to provide wealth, and this means being very effective and very efficient in the use of materials, trying to decarbonize our economies, building and constructing and producing goods in a different way. So it is good on that side. At the very same time, it is so much that we need to change all over the world that we should avoid getting damage ones against the others. So it is very important to keep on driving joint ventures, capacities that provide goods in a fair manner, and to avoid this type of subsidies that could harm the clarity, the transparency on the real cost being reflected on the price. There are tools, regulatory tools that we apply in Europe that ensure transparency, that ensure that subsidies that are not fair are avoided, and that play more or less in the same terms that are demanded for the European companies.
Right. Teresa Ribera, really good to get your insights today. Thank you very much for joining us, Executive Vice President at the European Commission. And of course, we're headed towards the China market opens. Take a look at how futures have ended, because we continue to see the downside pressure when it comes to U.S. futures. European stocks futures also under pressure as the euro holds steady at that 116 level. The China show is next. This is Bloomberg.